What is going on, everybody? Welcome back to another episode of Money Mondays with Midas. Let's go. And today is Columbus Day, also known as Indigenous Day. And yes, the market was open. But how well did it do today? We're going to talk about it right after the intro. Let's get it. All right, let's go. So as usual, I got an article. This one is from USA Today. All right. This one is called, "Is the stock market open today or open on Columbus Day?" Yes, and here's how it's doing. So let's talk about how well it's doing today. And we're going to get into, you guessed it, we're going to get into moving these dollars around. All right, the S&P 500 ended up today at 0.6%. The Dow Jones average rose 197 points, and the Nasdaq was at 0.4%. Okay. Now, the Federal Reserve was talking about, and I believe these increases were due to the Federal Reserve was talking about that they were going to increase the interest rates at the end of the month. But they came out and said that they're not. So that was definitely a plus for us. Oil prices, energy markets were also open, and oil prices soared over the possible spillover effects of violence in the Middle East. If you guys don't know, what you should know is Israel and Hamas, I think that's how you say it. They're at war. So, you know, it's terrible. You know, we were definitely we're sitting in bogus times, crazy times right now. But that's what's going on right now, man. So prayers to, you know, those that were already lost and, you know, family members. I think as of right now, it's been reported about 12 Americans, you know, were deceased. So. But anyway, due to the conflict spread to nearby nations that produce huge amounts of crude. That anxiety drove the price for a barrel of U.S. oil up 4.3% to $86.31 a barrel. Yes, the bond market was open today as well. Columbus Day is a federal holiday. Okay, all they're talking about in this little paragraph was Christopher Columbus and, you know, colonial oppressor and all this other stuff. No need to talk about that. All right, in the stock market, shares of defense contractors make weapons were particularly strong today. Northrop Grumman rallied 11.5%, and Lockheed Martin gained 8.3%. Pretty big movers today. On the opposite end were companies that count fuel as among their biggest expenses. American Airlines did sink 4.2%. Norwegian Cruise Line fell 2%. I believe we have Norwegian in our portfolio. That's okay. What goes down must come up. Major airlines have suspended flights to Israel. I mean, that's to be expected. That without saying. As the U.S. State Department issued travel advisories for the region, citing the potential for terrorism and civil unrest. U.S. stock market broadly has been shaky since the end of July, weighed down by the pressure of much higher yields in the bond market. So bonds are doing pretty well. With inflation still high, don't expect it to come down anytime soon. We'll see what the Feds is talking about. We'll keep a close ear on them. But with inflation still high for policymakers liking and the U.S. economy in solid shape, expectations have built on Wall Street that the Federal Reserve will keep its main interest rate high for longer than traders had hoped. Fed has already hiked its overnight rate to the highest level since 2001, and it indicated last month it may cut rates next year by less than earlier expected. With the Fed also continuing to shrink its trove of bond investments, the yield on the 10-year Treasury has jumped to its highest level since 2007. Wall Street hates higher interest rates because they knock down prices for stocks and other investments. They also make it more expensive for all kinds of companies and households to borrow money, which puts the brakes on the economy. Such a rise could lead to a hit of 0.5 percentage point to the U.S. economy's growth next year. According to economists at Goldman Sachs, they call it a meaningful change, but too small to cause a recession. And I kind of feel that. I actually saw it. I feel it because I had a vehicle. I was in a bad accident. My vehicle got totaled out. So part of why you guys haven't seen me for a bit. But having back issues and blah 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 blah. Anyway, so having, with the pressure on, had to get a new vehicle, utility vehicle, so to work and stuff like that. And the interest rates are just crazy. My previous rate was only like a 5%. That's not bad. That's decent. But now, the borrowing rates today is anywhere between probably like a 10 to 20%. And the 10, basically your 10, 11%. So I'm at 11%. That sucks. But it's not too bad. It's not too bad, but it still sucks. But your 10, 11% is basically the new 5-6% now. So I don't even think they're offering the 6% anymore in the automotive market. So it really sucks. That's that, man. So as always, I'm gonna leave the link for this article in the description so you guys can read this for yourselves. I highly recommend that you do, because it goes a little bit more in depth. I mean, there is a lot of talk about Columbus or whatever, but like I said, that's why you saw me pause. I kind of skimmed over that to see if it was worth bringing forward. Anyway, you know what we're about to do. Blam. All right, so our portfolio has definitely taken a hit. Of course, with the situation at hand, with the war going on, with the rate of inflation, is just seemingly high. So we're probably not going to see an extremely healthy portfolio for a little bit. But nonetheless, that doesn't mean that we're going to stop putting in. We're definitely not going to do that. We're going to keep putting in. All right. So we probably missed the boat when it came to the crude. It's not to say that, we can't invest. I mean, we're already sitting in some stocks in our S&P, in our VOO and stuff like that. But, I also like to individualize my portfolio as well. So not only do I like indexes, I like, personally owning the stock outright by itself as well. So, and again, like I said, the reason that I do that is because we're going to hit in multiple buckets. Okay. We're going to hit in our index bucket, and then we're going to hit in our individual bucket. No matter what, our index should perform no matter what. Okay. Whether the index is 3%, 4%, 5%, whatever the percentage is, we shall always see that percentage. We shall always get that return. Okay. Also with the index, as I stated in a few episodes back, man, make sure y'all tap in, like, share, subscribe, and click the bell, and make sure that you go back and tap into all the previous episodes, man, because it's a lot of educational pieces on there. Now, I don't delve as deep as Graham Stephan or Meet Kevin and all them guys. I don't delve that deep. All right, this is more surface level information, and this is more for more people that's trying to get into this. They're trying to understand this. They're trying to learn this, and I'm basically trying to hold your hand, and kind of walk you through this, guide you through this. You can use this app, you can use that app. You might want to put in here, you might want to put in there. Again, this is not financial advice. I highly recommend that you speak to a financial advisor or a fiduciary to help you along your financial journey. I'm showing you guys what I do, what I put my money in, and blah, 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 blah. All right, so now that all the disclaimers out the way, like, share, subscribe is out the way, let's get into it. So if you're new here, we have what we call our norms. Okay, so we always going to put into our normals. Our normals are going to be basically our indexes. Okay, our indexes and REITs. All right, one of our indexes that we have, first runner up, is going to be our VNQ. One here. VNQ is up 86 cents today. Total return, we're down $1.52. That's okay. Let's put our dollar in. If you see that message, just click the option I click, queue up the dollar, and boom, there it is. All right. Next one is one of our REITs. This is REM. Okay, this is our mortgage REIT. Down $2.45. That's okay. We're down. The market is pretty much down. So that's okay. Put your dollar in. All right. The next one that we go into is our S&P. Why? Okay. Only down 19 cents there. Dollar in. My bad if you guys hear my son, man. He been going crazy. So we've been winging him off, you know what I'm saying, to go straight to the bottle. So he been losing his mind. bad. The next one was the Vanguard, the VOO. So that was our next index. Okay, so now we got our indexes and our REITs covered. All right. So next, what I want to do is go down our technology. So we can roll on down our technology, get into our Matterport. And I saw that negative $84 or something like that. That's not accurate at all. So I'm gonna pay attention to that. I'm gonna delve into that, but we didn't even put that much in. So as you can see, like right here, like we only put in like 15, 16 bucks. So negative 84, not too sure what's up with that, but I'll look into it and find out. Next, let's go into the Microsoft. Microsoft is up $2.56 today, but we're down 30 cents. In, so all right. Dollar in. Got our Adobe. Hey, we're up 78 cents. Let's go. Dollar in. Our Tesla. I don't know if Tesla would necessarily count. Maybe. It's a battery company. It's still tech. We'll skip over Tesla for now because this is Nvidia. So, you know, Nvidia makes all your graphic cards and stuff like that for your computers and stuff like that. So we'll circle back around on Tesla and Rivian. Love a Rivian truck. And on our Meta, we're up 38 cents there. Let's get it. Let's go. Cool. We're going to stop right there. So, what I do want to look at, take a look at jump into one of these oils. See if we can put some oil up on the board. So we got the famous Exxon, Chevron, you know, the norms. Let's check out Exxon. Right, and as we saw, or as we read, you know, oil took a big, you know, well, took a rise because of the war that's going on. So, you know, prices of barrels went up. It was $90 a barrel. Let's go ahead and let's throw them on the board. $1 there. Fractional order. And Bam, there it is. I think what we're gonna do is we'll do Exxon, Chev, and they booming. All right. Again, if you're just tuning in, using Robinhood as our conduit so that we can purchase our stocks. Okay. We do fractional shares, $1 here, $1 there, $2 here, $2 there. And this is just to get you guys comfortable and acclimated to getting into the stock market. For those of you that, you're just starting to learn, you don't know what's going on. How do you get in? How do you buy stocks? And, how do you know what stock is the best stock? And blah, 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 blah. So Robinhood is the conduit that we're using to purchase our stocks. It's a great app. And right here, if you scroll down, it gives you little small descriptions about the company, what they do, what they produce, how long they've been operating, any other entities that they operate under, any other industries that they operate in. Anything you want to know about the company, they give it to you in this brief breakdown right here in the About section. And that's on every stock that you pull up, okay? They give you all your stats and everything. What's the market cap? What's the dividend yield? We got a dividend yield of 3.6. That's not bad. Not bad. So I'm probably going to start paying a lot more attention to these stocks and stay on top of them, see what they're doing. Maybe we'll increase it to $2-3. See how well they're doing. All right, so this last one that I want to go ahead and throw in here, not sure if it's up here. Some of you might be familiar with it. Petroleum. You can see they're up almost $3.50. So that was about $11. Not too bad. Like I said, $1 here, $1 there, $2 here, $2 there, whatever you want to do. Your portfolio does not have to look like my portfolio. You don't have to invest in what I invest in. If you strictly just want an all tech portfolio, if you want an all real estate portfolio, if you want an all cryptocurrency portfolio, that's on you. Whatever you decide to want to do, whatever you feel comfortable with. If you want an all media, like content, more like Disney and Comcast or ABC, them type of companies. If you like to have a whole portfolio full of that, fine. Yeah, absolutely. But that's it, guys. Appreciate you rocking with me today. I just kind of wanted to get this out just to see, that the stock will let you know that the stock market was open today, see how well they was doing today, and then, just move a couple bucks. So that's what we did. And I will catch you guys on the next one. Peace.